Today's stock of the hour takes a closer look at cruise ship companies. Shares of Norwegian to Carnival and everything in between falling largely on fears of disrupted global travel from the conflict in the Middle East. There was also an earnings report out of Norwegian Cruise Lines that didn't help matters either. Brian Egger joins us right now, senior gaming and lodging analyst for Bloomberg Intelligence. So Brian, let's first start off with the turmoil in the Middle East. The impact that we're seeing, at least certainly today, on stock prices in that space, and whether that is actually going to translate or somehow a reflection of any potential for reduced bookings. Do geopolitical events like this have that type of impact?
So at least with respect to Norwegian Cruise Lines, they have not observed any bookings disruption. And there is some precedent for this type of geopolitical conflict. If you go back to the Gaza-Israel conflict, cruises to the Israeli region representing about 4% of annual capacity days were canceled. So we've had past Middle East region conflict before, which can result in cruise cancellations. We have not yet seen any evidence of consumer disruption in terms of bookings, but the conflict is quite new. And I will point out that the decline in Norwegian Cruise Line has some unique company-specific elements that have less to do with the Middle East conflict and more to do with some company-specific situations.
Well, Brian, we only have about a minute left, but let's talk about some of those company-specific situations, because we know that Elliott, for example, has disclosed a stake of more than 10%. They've criticized management in the past, and they actually just issued a statement saying that their outlook for 2026, Norwegians that is, falls short of potential and that there is an urgent need for Norwegian board refreshment. We know that they've already replaced the CEO. What do you see in the offing here in terms of the Norwegian response?
And to your point, you're right. The guidance for net revenue yield growth in 2026 being flat is a contrast to about 2.5% growth for Royal Caribbean and for Carnival. And I think they've got a series of execution issues related to technology, deployment, management realignment, kind of making sure they're commercializing correctly their overall deployment strategy. You know, not a new CEO in the helm. He's only been there for about a week. And I think this does follow, as you pointed out, the activist involvement. So I think the situation dovetails with the Middle East conflict, but it is separate.
All right, Brian, really appreciate it. That is Brian Egger of Bloomberg Intelligence. Meanwhile,